The UK authorities these days are involved in revamping their regulatory framework. This is the case also of the asset management regime in the UK. There was a recent speech from the chair of the UK FCA, one of the financial regulators, where the main priorities of the reform of the UK asset management regime were unveiled. In this video, we will look at these three main priorities and share some of our thoughts on the implication for managers that are operating in the UK and cross-border in Europe. With its position being consolidated now outside of the European Union, the UK wants to reform the regulatory framework that is applicable to financial services in a way that suits better its practices, its need, and its customs as well. There is an element of caution whereby on the basis of some recent events, and we make reference to the very short government of some time ago, the approach of the UK regulators is to be very cautious in not completely alter what was inherited by the European Union and seems to be working still nowadays. The approach seems more to be of a reinterpretation in a more modern view and from a more modern perspective of this existing structure, notions and concept, taking into account the fact that certain markets have evolved. The first priorities is to look at the alternative investment funds. Those are funds that we know are for professional investors. The IFMD has been in place for over 10 years. The feedback is that the protection afforded by the Alternative Investment Fund Managers Directive is good, and sometimes also more than it could be expected. And the approach and the structure of the IFMD is based on a quantitative approach. There are main thresholds of assets, and so for managers that are above this threshold, there is an obligation to comply in full with IFMD. For the ones that are below those thresholds, there is this regime of registration with more limited abilities, starting from the ability to offer these funds cross-border in Europe. In the UK, there is a similar regime, which is the small UK AIFM, which basically is a more relaxed regime, which could also be in certain instances unregulated. And so the idea of the UK authorities as part of the reform of the asset management regime is to consider whether it's the case to keep this quantitative and threshold and size-based approach and amend it in the threshold, or else scrap it completely and adopt a different approach whereby certain higher standards in the areas of liquidity management, valuation and disclosure to investors have to be respected by all alternative investment fund managers, whether they're small or full scope. And there is a reason why this wants to be proposed, and that's because there is, of course, a set of small UK AIFM that is managed very appropriately and with respect of certain standards already. But there might be AIFM, small AIFM, not as well managed, which might push certain high-risk investments to retail investors, to elective professional investors, creating risks of selling, but also systemic risks for the entire market. And so the idea is that proposing this transversal approach where there are this higher standard would benefit also situations where, for instance, the investor is more of the professional type, and so there isn't really a need to overprotect him, and so this higher standard that is applied in a transversal way might be sufficient. Different is the case of the retail funds. And for what concerns the retail investors, we are touching one of the most important points of the entire reform of the UK regulatory framework. The idea is that retail investors should be protected, but at the same time they should have access to products that can sort of, if not guarantee, but be offering the likelihood of a good outcome for them, if you like. And so in a fund market that functions properly, these retail investors should be able to access fund products also without the support of an investment advisor. And so this is where it becomes even more important to have labels. Nowadays we have the UCITS label, which was derived by the European Union, of course. And also we have the so-called non-UCITS retail scheme or structure type of label. And we know that basically the UCITS started as a very mainstream product for retail, but over time evolved also to accommodate more complex strategies and basically became the preference also of professional investors. We also know that non-UCITS retail schemes are by definition more complex. And so in this attempt to create clear labels for retail investors to be able to choose from, there are different options that have been proposed. The first one is to completely eliminate the concept of UCITS, create a new rule book from scratch where basically there are different funds for different needs. Another idea would be to change the NERS into UCITS Plus, and that's because UK authorities know that UCITS is a very strong brand, and so basically the UCITS Plus should be the one that should accommodate for more complex strategies. An alternative option that is not dissimilar for the second option is the one to introduce a category of, to keep then UCITS and NERS, but introduce a category of very simple, highly liquid investment products. And of course we'll see what will happen over time, and once again the UK authorities don't really want to alter what works, which is the UCITS in this case. Lastly, technology. So we already saw that technology takes a very important role for what, and especially digitalization, for what concerns the retail disclosure regime that will be entering into force in the UK to replace also the PRIPS. And if you want to learn more specifically about the retail disclosure regime, we've linked an article in the description of the video. What does technology and use of technology means as a priority in the reform of the UK asset management regime? Of course, regulation today is prescriptive about the processes that need to be followed, not necessarily about the use of technology. And so the idea of the UK authorities is to introduce technology in the day-to-day operation where this doesn't harm, but actually makes the role and the work of fund managers a little bit easier. And so we talk about tokenization of funds, we talk of tokenization of portfolio assets, because basically the understanding is that using an entirely digitized approach for this transaction will make them more certain and will make the clearing and the settlement and all the other related operations faster, cheaper, removing some of the intermediaries and giving also a better value, if you like, because costs of these operations will be reduced. But technology is also to be used for engagement of investors. Nowadays, we have prospectuses of funds that are mostly lawyers' endeavor, if you like, and no retail investors would ever go through and look at the prospectus. The idea of the UK regulators is to rejuvenate the prospectuses, make them more modular, make sure that basically there are disclosures on sustainability, but also disclosure on the actual strategy, because nowadays the prospectus is limited to talking about investment objectives and policies, and making the contents more modular and better accessible by retail investors realistically in a digital way. Many may ask, okay, so we operate in the UK, we operate also cross-border, we will have two different regimes to abide to. On paper, we wouldn't disagree. In fact, it's like, this is what we see already in other areas, starting from sustainability. However, a trend that we have witnessed, and that should give a little bit of hope to all the managers who are active both in the UK and across Europe, is that despite appearances, Europe can see the good in the proposals made by the UK, and so where we can find that balancing act between innovation and maintaining what works, we cannot really exclude that Europe would align going forward with what the UK might propose. And we have seen this already, for instance, with the BRICS, and we'll likely see it also with the second version of SFDR. There is more to come on UK and also European regulation. Thank you very much for watching, and stay tuned.